Hey there folks. Welcome to my channel. My name is Piggy Bunny, your friendly neighborhood branch manager at Piggy Bank. Today, I've got some wild stories from the banking world to share with you, where innocent customers like you and I can unintentionally make suspicious bank transactions and end up looking guilty and getting on the bank's watch list. Or even worse, on the IRS's radar. Are you one of them? Well, let's find out. First thing first, let's talk about the magical number in banking. $10,000. Remember, cash is the name of the game. All banks in the United States are required to report cash transactions over $10,000 conducted by a single customer on a day. So it's per person, per day. Cross that threshold, even by a penny, you've got Piggy Bank's attention faster than a squirrel eyeing on a peanut. So, what's the deal with this $10,000 rule? All banks, like Piggy Bank here, will have to submit Uncle Sam's favorite report, the Currency Transaction Report, or CTR. And guess what? We didn't make this rule up, it's straight from the federal law playbook. I know, you're asking, hey Piggy Bunny, what's in a CTR? Don't worry, we're not going to ask you who you're dating, what you ordered for lunch, or how much money you make. It's just your basic information such as name, address and ID number, your account number, and the amount of cash involved, if you are the transactor. Of course, if someone is making the transaction for you, we will need that person's information as well. For a best practice, we will make a copy of the transactor's photo ID and ask the source or use of the cash. The whole process actually doesn't take much time. Since your profile is already in the system, you do not need to fill out any form. Some folks think a CTR means trouble, or maybe there is a fee. So what do? They split their deposits into smaller chunks over several days, even weeks, hoping to fly under the radar and avoid a CTR. But guess what? That often raises more eyebrows than it avoids, even though their source of funds can be completely legitimate. I'll give you an example. John is one of my long-time customers. He's a wedding photographer, and sometimes his clients pay him in cash. Now, instead of making one big deposit, he thought he would play it safe and spread it out over a few days with his wife, Sarah. Seems harmless, right? Bad idea. Piggy Bank's fancy algorithm can detect these red flags like a vampire smells blood. Both John and Sarah have accounts with us, so we can track their accounts and see where the money goes. If it's suspicious enough, even if Sarah doesn't bank with us, we can collaborate with her bank to follow the money. How do we work with other banks? We can discuss that in a different video. Please leave your comment below if you're interested. Now, let's talk about David, the accidental cash magnet. David rarely uses cash. He gets paid through direct deposit, and he's set up auto-pay for all his bills, so we don't see him often in the branch. But then all of a sudden, this guy's cash flow smelled fishier than a sushi joint in July. Turns out he's playing middleman for his buddy, depositing stacks of cash like he's a human ATM. One day our teller got curious and asked him about it. He said, I didn't really want to do that, but my friend needs my help. He even promised me a sweet cut for that. The teller was so shocked. What does your friend do? David said he had no idea. Looks like he doesn't have a stable job. Eventually, Piggy Bank had to report this because the aggregate amount became huge, and David was instructed by his friend to send out a shady wire to some unknown business. Poor David is being used like a napkin at a dinner table. Let's move on to Anna, a very friendly lady who had lived in Germany for over 10 years. Anna has been straightforward about the source of funds of her cash deposits. She has savings in Germany. Not wanting any attention, she typically comes to Piggy Bank once a week to deposit those savings in cash. As a matter of fact, she could have sent a wire from her German bank to us as long as she provides the purpose of the funds and report this transfer properly by filing the FBAR, which is Report of Foreign Bank and Financial Accounts. She would not get in trouble. Well, after all, you're just transferring personal funds from your own account, which is not a taxable income. Last story, let's not forget Auntie Laura, the baking queen. Recently, she opened a bakery in the neighborhood. Yum, she bakes the best cookies and carrot cakes. Oftentimes, Auntie Laura would come to Piggy Bank to deposit cash proceeds from her business. As her business gets busier, she makes more money and deposits more cash to her personal account. Eventually, our relationship manager had to talk to her and explain to her that co-mingling business funds in a personal account is not a good practice. The IRS may see that as possible money laundering or tax evasion. I'm glad that Auntie Laura talked to her tax accountant and decided to open a business checking account just for her bakery. With a cleaner audit trail and peace of mind, she could focus on what she does best, baking up a storm and spreading joy, one delicious treat at a time. Once again, federal law requires financial institutions, like Piggy Bank, to report currency transactions over $10,000 conducted by or on behalf of one person in a single day. By filing a CTR, the currency transactions here can be deposits, withdrawals, currency exchanges, check or money order purchases, as long as they are in cash. Banks usually have sophisticated systems to detect unusual activities attempting to circumvent a CTR. So, what's the moral of these banking bloopers? Keep your transactions clean, folks. Piggy Bank's got your back, but we ain't no piggy back ride when it comes to the law. Did any of these circumstances ever happen to you? Or do you have similar concerns? Comment below and let me know. If you like more banking stories, please don't forget to like and subscribe. Let me know what topics you want me to cover. I'll see you next time. Peace out, Piggy Squad.